Whether this altcoin season will come now or in Q4 2025 or possibly Q1 2026 is really difficult to know. In my own opinion, I do not believe we are in an altcoin season yet. And as we're going to be going through the analysis today, I'll tell you why I do not believe we are in an altcoin season yet. But it is surely, definitely the time from a historical perspective, looking at cycles and analyzing all the data, it definitely makes sense to start building a watch list of altcoins that we know will do very well and do the multiple crazy X's during the final phase of the cycle, typically at the end of the 4-year cycle, which is supposed to be in Q4 of 2025. At the moment, Bitcoin and Ethereum are leading the market direction, with altcoins rotation expected to follow as per the historical pattern. Usually, for all the previous cycles that we've been through, the exact same thing happens. Money flows into Bitcoin, then from Bitcoin it flows into Ethereum, then from Ethereum to large caps, and then eventually you have the blow off top that is represented by an altcoin season. However, it has been taking way more time than usual. In the previous historical cycles, we've seen altcoin season come way easier. We've seen multiple bounces when it comes to altcoins across the cycle, but this is the first time where we see Ethereum actually outperforming and pushing the whole market forward with it. So we know definitively now that money is flowing from Bitcoin into Ethereum. Next would be ETH to large caps and then altcoin season. However, I do not believe that we are there yet. We still need the business cycle liquidity, the macro liquidity that we have been waiting for, and it's not yet here. We are sure that it's going to be coming in the near future, but we're not there yet. So exposing our portfolios to altcoins at this stage can be detrimental for the capital, because keep something in mind. The most important thing in investment is capital. If you lose your capital, you lose everything. So there is absolutely no return that justifies you taking excessive risk and then eventually blowing up your capital. That's why we are using our active portfolio, which is a small portion of our portfolio, to tactically trade and try to catch these small bounces until we believe that the data is showing us that we have a full-blown altcoin season ahead of us. Then we go on the risk curve and then bigger positions in order for us to catch the blow off top of the cycle. And keep in mind, this blow off top of the cycle is the hardest to manage because it includes so much emotion, so much FOMO, so much news. Every project is going to be trying to chill their token to you because they want exit liquidity. So right now, this is where I believe we are in the cycle. And obviously also Ethereum right now is leading all of this. So please do not be fooled that it is an altcoin season, because it's not an altcoin season. Altcoins are doing well because Ethereum and Bitcoin are doing well. And the biggest indicator to this is the total 3 divided by ETH chart. This chart shows you altcoins compared to Ethereum. So it's very similar to altcoins to BTC pairs. As you can see here, this is the altcoins to BTC pair, and it has been in a downtrend. And if you look at altcoin Ethereum pairs, it's very clear since April 20, this chart has been just going down. This means that altcoins are losing value to Ethereum. It fell down 50%. If we are in an altcoin season, why alts are losing value to Ethereum? It makes sense to park your money in Ethereum for the moment and wait. Be patient. Be patient. It's very difficult. It's an extremely difficult thing to do, but be patient. The trend here, the macro trend, is very clear. You can clearly see that all 4 moving averages line are going down, which means that we are in a macro bearish trend when it comes to altcoin ETH pairs. Yes, we might have short bounces. Yes, there will be some tokens that will outperform Ethereum, but it is very difficult to identify those. So from that perspective, I do believe that money right now is trickling into Ethereum. ETH dominance has been rising since Ethereum tested its lows back in April, and right now ETH is driving this market. That's why it makes sense to park your money in Bitcoin and Ethereum only. Most likely Solana and large cap will follow, but we're not there yet. And it's very clear. If you look at Solana is way off from its all-time high, and it's struggling compared to what we're seeing in Bitcoin and Ethereum. For our portfolio, we are positioning heavily in Bitcoin and Ethereum for the moment and waiting for liquidity to come, while obviously also using our active portfolio in order not to feel this urge, because everybody feels it. When you look at a chart and start seeing the price rising, you're gonna feel like, I'm missing out, I have to buy, and you probably will be buying the top. So at the moment, Ethereum and Bitcoin are leading. Altcoin dominance position to benefit once macro liquidity conditions improve. Timing remains uncertain, but flow is definitely inevitable. Historical post-halving patterns as well tells us that July and August usually are in the green, but September is weak. So if we look at historical cycles before, and every single post-halving year, so that is in 2013, that is in 2017 and 2020, every single time July and August was green for Bitcoin, as you can see here. August, for example, was plus 30%. In 2017, it was plus 65%. In 2021, it was plus 13.8%. So we can expect August also to be positive and September to be negative if the historical patterns returns the exact same thing, which we are expecting. If this plays out, then the best case scenario would be to park your money in BTC and ETH, Start preparing your watch list of coins that you want to start buying for the altcoin season. Once September hits, and if we have the drawdown that we are expecting, this will be your signals for you to start DCAing into altcoins for a potential Q4 2025 top or Q1 2026. Right now, for our portfolio strategies, this is what we are aiming for, and this is what we will be putting a plan for. Bitcoin right now is showing strong technical foundation despite its elevated prices. So we can clearly see that BTC at the moment in all time frames is in a strong bullish trend. This is the daily or 4 moving averages line are up. As you can see here, we are sitting very close to all-time high. The all-time high was around 87.89 billion, and right now we are at 82, signaling that the momentum is strong and fundamentally things are still looking good. And we also have a CME gap on Bitcoin between 117 and 119. So that's the gap here, as you can see. That's the gap, and most likely we tend to revisit this gap and fill it before moving higher. But it's not always the case. Brandon also shared something today inside of Discord. Almost 60 to 80% of the time we close the gap. So this is basically what I'm seeing in the market in the medium to short term. When it comes to fundamental stuff, when it comes to regulation, when it comes to policy, we are seeing major adoption continues when it comes to BTC and digital asset class. Right now we have Harvard and Brown have bought IBID. Harvard is pretty sizable too. So this is the 29th biggest holder out of 1,300 holders. And this is Eric, the senior Bloomberg analyst. He's saying, in his opinion, endowments are the hardest institutions to hook. They rarely bite on ETFs. And the fact that Harvard actually bought a Bitcoin ETF, it speaks loudly. This is obviously the further indications that institutions are here, and this cycle is definitely driven by institutions. Hopefully, by the last phase of the cycle, it will also be driven by retail speculations. This cycle, the difference between this one and the last one is that this time you have institutions and hopefully retail at the end of it, while the previous one was mainly driven by retail only. On top of that, we also saw 2 executive orders from Trump that actually put this momentum that we're seeing right now, and that's why BTC and the whole asset class is pushing higher because of these 2 executive orders. And these were basically related to the retirement being able to start investing in alternative assets, such as crypto, digital assets, and private equity, and all of these things. So obviously this will unlock more accessibility and more capital to the digital asset class. Obviously this was not priced in before. And on top of that, he also signed another executive order, effectively killing Operation Choke Point 2.0, which was basically in the last administration, where the banking sector as a whole tried to cut off all of crypto altogether. We also see the SEC and the CFTC providing clearer guidance for spot trading and liquid staking, reducing regulatory uncertainty. So here we see the SEC saying that liquid staking doesn't run afoul of security laws. So further telling the companies and projects that they can keep experimenting in DeFi without risking them going to jail. Economic conditions are right now approaching the Goldilocks scenario. If we have enough weakness in the economy to avoid recession but to induce a stimulus, then all charts are going to keep going up and to the right. So what does all this mean for our positioning? Market right now setup is resembling 2021 conditions, with combination of falling rate expectation and speculative activity, but this time with institutions. Risk on environment is developing, but we are not there yet. This is the time to start looking for potential altcoins and DCA strategies. As you know, right now we have our main position in BTC. We are opening positions every single week in Ethereum and Solana. This is for the passive portfolio. Focusing on large cap, definitely it makes sense. For the moment, if BTC breaks all-time high, we will add to our hedging position, because again, we are expecting a drawdown in September before we move into the final phase of the cycle. And at the same time, we're keeping our active portfolio for tactical trading. We are trading with Ishiro and Living Life, providing us with amazing calls recently. Right now we have one on BTC, and you can definitely see the returns of the members. They are mentioning them here. So obviously, if you have some time, feel free to look at these calls and copy trade them for your own portfolio, to try as much as you can to accumulate stable coins, because you're going to be needing them. Once September's drawdown comes, we will definitely need them. Meanwhile, we will be developing the alts watch list for potential buys in September and October.
Trump's company, Truth Social, wants their ETF to hold their Bitcoin directly. And I'm pretty sure Fidelity ETF is the only other ETF that holds their Bitcoin directly. BlackRock said something to Coinbase at one point, and I'm not sure if they actually took custody of their own Bitcoin. But it's an interesting trend, because we all know the importance of self-custody. Is Trump planning for some sort of blow up and my company should own my own Bitcoin? Just a speculation there. But you can see the Trump president family is getting set up for what we've all seen coming, which is this industry getting continually higher and higher in price due to adoption. So what have they done to set up for that? A $2 billion buy on Bitcoin, demanded the Federal Reserve to lower interest rates, said that they think Bitcoin is going to 1 million. They sit on the board of Bitcoin treasury companies, said they want America to buy Bitcoin. It's all in public, and people are saying that the top is going to be at 150K. there's going to be retracements, but the top, I feel like we're going to see consecutive years of a bull market and just retracements for maybe weeks at times or months at times. And then we continue on. We'll have to track all of the different data to see, is the slowdown of velocity of money, is there macro risk at that time in the market? Should we take profits? And all of these different things that you assess as you go along in markets. And that's what we're here to help you guys do. You can see through the setup that we're showing here that if you just buy this asset class and sit back for 5 years, you don't even need to be watching the market every month or every 6 months. We're adopting a government here that is Bitcoin friendly. If this goes through as the Federal Reserve pick and he's Bitcoin friendly, Stephen Moran, and that's just another W on the board for Bitcoin, and just more confidence that you can have where you can just buy it, set it, forget it, not have to check on it every 6 months. If you're that type of person that doesn't want to follow this stuff, just buy it, set it, forget it. Then check in with us every once in a while to see what's going on. But this is seriously the innovation that a lot of people don't really see yet. A lot of people just focus on number go up technology, but Bitcoin is fundamentally going to change the lending market because it's going to change the price to lend money. It's going to competitively go down because you're providing the most pristine bare asset that there is, which is Bitcoin. A typical mortgage only has the piece of real estate as a collateral for the loan. But when you add in Bitcoin, it's now Bitcoin and the house as collateral for the loan. And obviously we all know in this group that Bitcoin is going to go up in value more or faster than real estate. And so what this allows mortgage providers to do is pay off loans faster, offer better interest rates. And there's been a couple companies who've been pioneering this, and it's going to come to mortgage products. It's going to come to all of these different products. I expect life insurance at some point as well. And bit bonds, obviously, I've mentioned in this group a lot. So yes, Bitcoin improves the legacy financial products. We probably said this already. Many of you might already know that, but a lot of people don't realize that. And so this is this big innovation that's going to come to TradFi. Michael Saylor is trying to pioneer it, and we'll see who's next. Is 21 Capital going to do bit bonds? We will see. This is an actual use case of people using Bitcoin, because some people are like, oh, Bitcoin is just a treasury asset. So you can actually go and buy anything you want, coffee, any small items you want through Lightning, a layer 2 built on top of Bitcoin. And there's many different apps that integrate with Lightning now. And all these conferences, vendors that go there are accepting Lightning now. And we'll see over time how this trend continues. But to distill it to the beginning theme of this call, which is decentralization versus centralization. When you build stablecoins on top of Ethereum, they can be censored. Maybe you're not doing stuff that's bad, but if you have an authoritarian government in 20 years into the future, you want to set them up with the tools to potentially censor you. So we want to support these networks where you can operate within the economy, spend money, and not be censored and told you can or can't do something. So building on top of Bitcoin allows you to do that. Decentralization with Bitcoin versus all the other networks, which are mostly centralized and able to be censored. We're looking for the things building on top of decentralized networks so that we can support those things. And then we'll also go invest in the things on centralized networks. So we'll get ROI from the centralized stuff because yes, there will be a lot of money there with big banks and big VCs. We'll make money over there, lock it into Bitcoin, support the decentralized stuff. And who knows, maybe the decentralized stuff doesn't win over time and we'll want to be wealthy and have certain setups. But I think this is going to be a very, very long game played out over 50 to 100 years, and we're going to be following it to see how Bitcoin survives over time. There's 14 billion in shorts ready to get obliterated if we go up to 125K. That's obviously a bullish trajectory. Market makers want to push price up there to liquidate those shorts. And then we have some negative trajectory, which is leverage building in the system with various different products, whether it be futures, people going leverage long and market makers hunting that, or some more advanced things, which is stable coins and money flowing into them, taking out loans, and potential depegging event that could topple crypto. Could it be an event that affects us in a downward trajectory in the future? Potentially. So I want to bring it up. And then long term, this is why you're buying Bitcoin. Even if we end up with 3 million price in 2045, owning a portion of it that can't be taken from you, can't be censored. It is a tool for freedom, so you can do what you want in the world. While 99% of people are focusing on Bitcoin treasuries and doing risky things with third parties with their Bitcoin, what we should be doing is focusing on building our self-custody stack so we have confidence that we can do whatever we want in the future.